Welcome to our channel. Today, we're diving into the crucial aspect of trading that often gets overlooked: trading psychology. Think of it like this. You could have the fastest car in the world, the best equipment, and a team of mechanics. But if the driver isn't mentally prepared, if they're scared, emotional, or impulsive, they're never going to win the race. So let's dive into the 10 essential rules to master your trading psychology, maximize your profits, and most importantly, avoid blowing up your account. Before you even think about clicking the buy or sell button, you need a rock-solid trading plan. Your plan is your roadmap to success, and it needs to outline everything from your entry and exit points to your risk management strategy. Think of it like building a house. You wouldn't just start laying bricks without a blueprint, would you? The same goes for trading. Without a plan, you're just gambling, hoping for the best. Your trading plan should be specific to you, your risk tolerance, and your financial goals. It should include what kind of assets you'll be trading, how much you're willing to risk on each trade, and your profit targets. A well-defined plan helps you stay disciplined, avoid impulsive decisions, and take the emotions out of trading. It's easy to get caught up in the heat of the moment, but having a plan keeps you grounded and focused on your long-term goals. Take the time to create a comprehensive trading plan, write it down, and stick to it no matter what. Remember, failing to plan is planning to fail. Now that you've got your plan, it's time to talk about the golden rule of trading risk management. It doesn't matter how many winning trades you make if one bad trade wipes out all your profits, or worse, your entire account. The key to risk management is simple: never risk more than you can afford to lose on any single trade. This is where stop-loss orders come in. A stop-loss order is like an insurance policy for your trades. It automatically sells your position if the price drops to a certain level, limiting your potential losses. Determining your risk tolerance is personal. Some traders are comfortable risking 1% of their account on a single trade, while others prefer to stay below 0.5%. By managing your risk effectively, you protect your hard-earned money and stay in the game longer, giving yourself more opportunities to grow your account. So be smart, be disciplined, and always manage your risk. Trading is a marathon, not a sprint. It's easy to get caught up in the excitement of a bull market or panic during a downturn, but the most successful traders are those who stay disciplined and stick to their plan, no matter what the market throws at them. Think of it like a diet. You might be tempted to indulge in a cheat meal here and there, but if you want to see real results, you need to stay disciplined and stick to your meal plan. There will be times when you're tempted to chase after a hot stock tip or exit a trade early because you're afraid of losing money. But remember your trading plan. Trust your strategy, and don't let emotions cloud your judgment. Wait for the right opportunities that align with your plan, and don't be afraid to sit on the sidelines if necessary. So keep your emotions in check, stick to your plan, and don't let the market dictate your actions. Fear and greed are the two most dangerous emotions in trading. Fear can cause you to miss out on profitable opportunities, while greed can lead to reckless decisions and significant losses. Think of it like this. Fear is like seeing a spider and running away. You might be so scared that you miss the fact that it was just a harmless daddy longlegs. Greed, on the other hand, is like seeing a shiny object and grabbing it without thinking. You might be so focused on the potential reward that you don't realize it's just a worthless piece of junk. Learning to control your emotions is essential for making rational trading decisions. One way to do this is to practice mindfulness or meditation. By learning to manage your emotions, you'll be better equipped to handle the ups and downs of the market and make sound trading decisions. Every trader makes mistakes. It's an inevitable part of the learning process. The key is to not let your mistakes define you, but rather to learn from them and become a better trader. Think of it like learning to ride a bike. You're going to fall down a few times, but each fall teaches you something new about balance and coordination. Eventually you get back up, dust yourself off, and keep practicing until you're riding with confidence. Every loss is an opportunity to learn and improve. Don't just brush off your mistakes as bad luck. Instead, take the time to analyze what went wrong, identify any patterns in your trading, and adjust your strategy accordingly. One of the best ways to learn from your mistakes is to keep a trading journal. Reviewing your trading journal regularly can help you identify your strengths and weaknesses as a trader and make the necessary adjustments to improve your performance. In the world of trading, Patience is not just a virtue, it's a necessity. It's tempting to jump into every trade that looks profitable. But remember, not all opportunities are created equal. Think of it like fishing. You wouldn't just cast your line anywhere and expect to catch a prize-winning fish, right? You need to be patient, wait for the right spot, and use the right bait. Trading is no different. It's about waiting for the perfect setup, the ideal entry point, and having the discipline to say no to trades that don't meet your criteria. Be patient, wait for the right moment, and don't force trades that aren't there. Remember, good things come to those who wait. Overtrading is the quickest way to sabotage your trading success. It's like eating a whole bag of chips in one sitting. You might feel satisfied in the moment, but ultimately, it's going to leave you feeling sick and regretful. Overtrading is often driven by boredom, impatience, or the false belief that you need to be constantly in the market to make money. But the truth is, the most successful traders are often those who are the most selective with their trades. Think of it like a sniper. A sniper doesn't just fire randomly at any target. They wait patiently for the perfect shot, taking into account all the variables before pulling the trigger. Similarly, you should approach trading with a sniper-like mentality. Don't waste your ammunition, your capital on low-probability trades. Instead, be selective. Wait for high-quality setups that align with your plan and execute your trades with precision. The financial markets are constantly evolving, and staying informed about market news, trends, and economic indicators is crucial for making informed trading decisions. Think of it like being a doctor. You wouldn't want a doctor who's still using outdated medical textbooks from the 1950s, right? You want a doctor who stays up to date with the latest medical advancements and research. The same goes for trading. You need to stay informed about the factors that are driving the markets, such as interest rate changes, company earnings reports, and geopolitical events. Fortunately, we live in an age where information is readily available at our fingertips. From financial news websites and trading forums to social media and podcasts, there are countless resources available to help you stay ahead of the curve. The more informed you are, the better equipped you'll be to make smart trading decisions. Setting realistic goals is crucial for maintaining a healthy trading mindset and avoiding disappointment. It's easy to get caught up in the hype of overnight success stories, but the reality is, building a successful trading career takes time, effort, and discipline. Think of it like building a skyscraper. You wouldn't expect to see a 100-story building erected overnight, right? It takes careful planning, construction, and a whole lot of patience. Trading is no different. Instead of aiming for unrealistic returns, focus on developing your skills, refining your strategy, and gradually growing your account over time. By setting achievable goals and celebrating small victories along the way, you'll stay motivated, avoid burnout, and increase your chances of long-term success. The financial markets are constantly evolving, and what worked yesterday might not work tomorrow. That's why it's essential to adopt a mindset of continuous learning and improvement. Think of it like technology. Imagine using the same phone you had 10 years ago. It would be slow, outdated, and incapable of keeping up with the demands of today's apps and software. The same goes for your trading skills. The markets are constantly changing, and you need to adapt and evolve your strategies to stay ahead of the game. The more you learn, the better equipped you'll be to navigate the ever-changing market landscape. Thanks for watching. If you found these tips helpful, make sure to like, subscribe, and hit the notification bell for more trading insights. Remember, mastering trading psychology is a journey, and with these rules, you're well on your way to becoming a successful trader. Now go out there, trade smart, and most importantly, control the one thing you truly can control, your mindset.